All right, everyone. Good evening. Good evening. Welcome to the Sunday night webinar. It's been a really interesting couple weeks and a really interesting week in the market, and I think we're gearing up for a pretty cool week right now. So, as always, the purpose of this webinar is for you to learn. We learn as a group, so no questions are dumb questions. So feel free to ask anything and everything that you want about the market overall, about what's going on from a economic macro perspective, any individual stock that you might be looking at. Anything's fair game here. So just a couple things that are going on right now in the market, and here's why there hasn't just been a lot of activity. Well, there's been a lot of activity, but not a lot with like per se per watch list and this and that, is because just I talk a lot about in videos and things about like not trading in range, right? You never want to kind of trade in range, especially when there's a lot of indecision and choppiness in the market. So if you look at, and I'll draw a little bit, just kind of what has been going on, the market after this steep decline right here finds itself a little bit of a bottom, right? You get a little bounce right here from the first, so there's a little bit of kind of preset resistance. So the market's kind of telling you, okay, we don't really want to go any higher than this, at least not right now. Get a bit of a pullback down to here, and then look, bounce up to the exact same level, right? So that resistance definitely holds for this particular movement in the market. And then even better, after another pullback, this support holds. So the market's kind of telling you, okay, we kind of want to be in this range right now, right? And the reason why you don't really want to trade stocks, futures, whatever, you can do what you want to do, but this is just, my thoughts is that you want to stay out of range. You want to be either the market's clearly bearish or clearly bullish. Your stock is clearly bearish or bullish. Trading in range, although these can be great scalps if you're looking for, picking up a trade on the market overall as a long, right here is actually a really good trade because you know that risk-wise, you've already formed a bottom down there, so it's really not a bad trade whatsoever. But if you're looking for something that's going to give you, I would say a very respectable return over, a period of a couple of days, weeks, months, however long the trade is working, then you kind of want to stay out of when things are going to range right here because this could easily, if you're, let's say you're picking up a very heavy amount of shares on a particular stock down here, and that goes south. If this support, and let me clean this up, if this support right here breaks and the market continues lower, then it's going to continue lower pretty hard and fast, and it's going to, the people are going to start to panic sell, and that's kind of, what you got going on right around here. So if you're just looking at, let's back this up just a little bit and look at a little bit longer term, and just look at, let's say that the market decided to break this support right here. You're looking at most likely selling off down to this level right here, which is the previous bottom on this big correction right here back in the beginning of the year. And that's just not a loss that I'm willing to take. Not a good time to get long, right? Although you do definitely want to buy on dips. You kind of want to wait for the indecision to get out of the way, kind of, the market to make a decision on, okay, here's what we want to do. And there's just too much going on right now to make that decision. Now, this week or this weekend, there was a big announcement, which could absolutely be bullish for the market, and we will see how the response is. The response so far, obviously, has been fantastic, but you have to take anything that happens after hours in the market with a grain of salt. So if you look right here, the market has gapped up about 40 some points since the close on Friday, which means that the response to the news that happened, which was basically, and I'll go ahead and pull it up, basically saying that tariffs, let me get over here. All right, so Saturday's working dinner between President Trump, all right, and China was said to be a highly successful meeting. That's at the G20, and that's a quote right there. But the big thing is the numbers really what matter is that the Trump agreed to leave U.S. tariffs on $200 billion worth of Chinese goods at 10%. So that means no raise in tariffs, which had the market scared for a good amount of time, right? People were scared of tariffs and what is that going to do to the market, and how's it going to affect imports and exports, and how is that going to affect our relationship with China, which we get a lot of goods from, and our market kind of depends on, right? So that's big, right? That's big news. Now, the reason why, in my opinion, it's not time to shove all the chips in is because of this, right? It's because of, markets don't always respond exactly the way you think. If it was that easy, then everybody would just buy right now and hold, and everything would be great. But you do have these two pretty significant resistance levels right here, and we are at that resistance level almost currently right now. So I personally, for my trading, am going to wait to see a test of this level right here, which is about the 2820-ish area. If we break above that 2820 area in the market, then the market is clearly bullish. If we do bounce off of this and head back down, which is possible, and you might say, well, this is great news. What is going on? And I could say, well, there's still a lot of other stuff going on. Number one, yeah, tariffs are looking good, but you still got the Fed talking about raising interest rates, although they did make some positive comments last week about what their possible intent is going to be. That doesn't mean that the response to that is always going to be great. And some people may just go from trading from a purely technical perspective, and they may look at this and say this is a great place to get short, or even some people who possibly got long in markets down here may say, okay, it's a great time for me to get out. So there could be a lot of indecision around the 2820 area. So for me, a much safer bet is to wait for that test of that area and then see what's going to happen after that. But it definitely, this gap up right here is definitely a good sign. It brings a little bit of hope to at least the short term about what could potentially happen in the market. And it's a good time to have a list of stocks ready, which I'm going to send out a watch list with a couple stocks. Now, here is a bit of a just for your education at times like this, and you may say, well, I want to go long now, and I going long mean buying, right? I want to go long now. I want to buy now. If you do want to do that, right, because you're afraid that this, if this does break above the 2820 area, it's probably going to break pretty hard, right? And it's going to get a decent pop, and who knows where it goes from there. It could potentially test this 2940-ish area where it was the previous high within the matter of a couple days, a week. Who knows? But what I do in times like this is if I do want to at least not want to miss the action, get a part of it, is you don't always have to be all in or all out. So let's say that you're looking at a particular stock and it's interesting to you, and it's sold off with the market, no other reason. You've done the fundamental research and you say, okay, there's no fundamental reason why the stock sold off. Just the fact that 3 out of 4 stocks follow the market. And I believe that this stock has just followed the market down, so it should potentially follow the market back up, is you can always take a starter position. And the way to do that is just, let's say that your max position is, let's just say, for example, 300 shares. Well, do you want to necessarily just buy 300 shares right now where the market's at, when this could potentially hit this wall and plummet back down? And then or you always have the option to build yourself into that position, and maybe you start with 100 shares. If it hits the wall and starts to come back down, then you lost about a third of what you would have lost. So you're definitely minimizing your risk. And if it breaks above the 2020 area, you can always add, and then maybe you go to 200 shares. And then when it pulls back a little and tests this area again and starts to go back up, you add yourself another 100 shares, and now you're up to 300. Full position while minimizing your risk. And really, folks, that's what it's all about. It is not about going all in or timing your entry perfectly, because that's never going to happen. It's about minimizing risk. Rule number 1, don't lose money. Right? And that's a great way to start here, is to build yourself into positions. And as your profits go up, if this trade is going in your favor, then you scale yourself back out of the position by selling, blocks at a time, maybe 100 shares at a time. After you get a nice run, a nice pop, and then you get another run and you sell another 100, and you scale yourself out. So that way you're putting profit on the table, you're putting some bread on the table while still leaving yourself, a good chunk of your shares to be able to profit from further movement. So this is not an all in or all out game. And that's probably one of the most important lessons that I learned as a trader is that you do not have to be all in or all out. The best traders usually scale themselves into and out of positions pretty frequently. So just like I said, looking at the market, nice gap up here. We're going to see what this 2820 area test does. I would imagine that we would get a test of that tomorrow. I don't see why not, especially with the drivers behind it. Now, remember a couple things this week. You got the oh no, that's next week. I'm sorry. You do have Wednesday. Wednesdays the markets are closed to observe President Bush passing away. So just a little bit of food for thought there. That there is one less trading day this week. Shouldn't really affect the market overall, in my opinion. I don't really see how that would affect anything except just one less day to trade. But let's take a look at a couple of the big drivers of the market though, and just look at a few of these stocks that are just crushed. Apple's been crushed lately, just demolished, and I mean it's still $178 stock. So let's just be real for a minute and talk about in the grand scheme of things. Here's Apple's long-term chart. So it's back down to where it was months and months ago. So really deep pullback on this, on most of the tech stocks in general, right? But a lot of people were saying, well, I was getting emails and questions about should I buy, and this was around here or here or here. I said, Apple, along with the other FANG stocks, if you hear that term, FANG stocks, Facebook, Apple, Amazon, Netflix, Google, are really big drivers in the market. There is a lot of money in these stocks, not only retail investors, but institutional investors. So when these stocks are struggling, the market's going to struggle. And when these stocks are doing well, the market is most likely going to do well. Just in my opinion, I think with the fear that's going on right now with the second pretty significant pullback in 1 year, in only a matter of less than 12 months, two pretty significant pullbacks, is that a lot of money's flowing out of these. People might be starting to think that tech might be a bit overvalued. So personally, from a long-term perspective, talking about long-term investing, um, I would feel comfortable adding a little bit at a time where the price is at right now, but definitely considering that it could drop further. So I'm going to, again, if let's say my total add for Apple, I wanted to add a total of 500 shares total, like, that's what I wanted to own. Maybe I would add 50 or 100 right now, and then I'd give it another couple of days and maybe add some more because you want to get yourself the best cost average on these stocks. And I don't see any indication that this is going to turn around anytime soon. There's nothing telling me that Apple's going to this is the bottom. It's going to have an explosion. It really is kind of in between support and resistance levels. Kind of next support levels down here at 163. 170 is a little bit of support just because that's where the last bounce was after this deep run from 220 down to 170, but 163 about is where we're looking at. That could potentially pull back to. So, but from a trade perspective, I wouldn't be trading this right now. If I'm investing, that's a different story. Let's look at a couple more. Amazon, kind of same thing, a deep pullback from 2050 down to 1690 right now. And you look, got a little bit of a double top action right here, right? Pull back to here. Got a bit of a lower high right here. So how this high is lower than this high. A little bit deeper pullback right here. So, potentially this could be the high right here, another lower high, and looking for another pullback on Amazon. So again, from a trading perspective, not my top pick right now. From an investing perspective, maybe add a little bit, but I think this has, more to pull back in my opinion. I mean, just earlier in the year, it was an $1,100 stock. That's a $500 difference. All right, let's take a look at Facebook. Facebook, just, significant drop from 218 all the way down to 140 now, low of 126. And let's see if we can back this up just a little bit. Let's go to the 3-year. Yeah, I mean, look at that's a significant drop all the way back down to where it was in 2017. Right, so again, from a trading perspective, not much interest in it right now. Not until tech, kind of proves itself that it wants to do something again. But like I told you, I think a lot of money's flowing out of these, which is actually a good thing, right? Because from the market overall, and for us looking for stocks that have significant moves undiscovered, you kind of want money available to be able to trade those stocks uh, from institutions and retail traders. If everybody's money's tied up in Facebook, Amazon, Google, and Netflix, and all these stocks, then there's not much else to go around to drive up the prices of other stocks. But if the money starts flowing out of it, then people are going to look for new ideas. Just to find, these are previous watch list winners for any of you guys who've been with me for a while. Finding stocks like this, right? This is where you want the money to be flowing into. This was a watch list ad down in the 6s, and it ran to $52. And here's another one. This was a watch list ad at $4.75, and it ran all the way to $37. This is where we want the money to flow into. These are the the unsung heroes, the undiscovered gems in the market. So, but you can't have everybody's money tied up in Facebook, Amazon and Google. You got to have some money available to be able to drive prices like this up, especially with with the institutions, right? Because the institutions really drive the prices of these stocks, and we want to kind of try to, accordance with what I teach you, kind of predict and see where the institutional money is flowing. So for me, my game plan this week, I am going to add a few stocks just to keep an eye on. Remember, position size, you do not have to always be all in or all out. Position sizing is key. You can scale yourself in and out of trades. You can keep your position size, as small as you want, or not at all, right? Sometimes the best trade is no trade. So for me, I'm looking at not really doing anything until we test this 2820 area, which is going to be key in the market. I am leaning towards bullish this week. I am leaning towards the market being bullish, but the price action will prevail, and I want to see what happens at this 2820 area. All right, so that'll be extremely important place for us to be, or for us to test and see what's going on. All right. So go ahead and do something real quick. Hold on 1 second. All right, questions. We're going to go ahead and open up for questions. And if you got a question, just go ahead and type it in the chat box.